What's up, everybody? This is Josh from Red Shorts Trades. Today, I'm going to review two of the trades that I took today, both of which were winners, but there were some key elements and key things that you need to really understand about these trades to ensure that you're able to take a trade like this and stay in it till the very end, till your plan hits. And I'm going to explain exactly what those look like. Welcome back for those who have been watching and following alongside the journey. I figure it's always good to kind of reintroduce myself from time to time. And so for those who don't know, I'm Josh from Red Short Trades. I've been trading for pretty diligently about 7 or 8 months, and I have a very specific strategy of the break and retest strategy that I use when it comes to taking my trades. And I'm learning right alongside you. And this is my way of documenting the trades that I take so I can keep myself accountable, and hopefully you learn something in the process. So if definitely you're finding value in the short videos, the long form videos, please hit that like button, pound that subscribe button so you can continue to get more of this awesome content. If you know somebody who needs to hear anything that we're talking about today, be sure to share it around. Also, I want to point out that in the description below, there should be some links to some ebooks that I am writing that are all geared towards my strategy, candlestick patterns, and the different aspects of what you need to know about trading the break and retest strategy as I train it and talk about it on this channel. So please give those a look, check them out. If anybody's curious about the broker that I use, it's in the description as well. I use Webull, so you can check out that broker below. So anytime I jump into a chart, I'm on Webull. Webull's just great. It provides great candlesticks, great. I haven't had too many issues with it. I'm able to get my orders filled, and the technical analysis on it is actually pretty stellar, better than Robinhood, and you don't have to pay for a subscription for TradingView, which I really appreciate. So before we jump into the two trades that I took today to do the trade review, I want to review some very, very key elements of what I look for every single time I am looking at a chart. Every single time, before I look at what I am going to trade for any particular day, there are three primary things that I am looking for. The first thing I'm looking for is a higher time frame structure break. I'm looking for flag patterns or breakout patterns, double tops. I'm looking for reversals. I'm looking for something on the higher time frame that ultimately is signaling where the higher time frame momentum is going. Once I get into the day, I'm looking for intraday momentum. I can't express how important intraday momentum is. Momentum is the thing that carries your trade to completion versus having it waffle around in consolidation, which ends up stopping you out of trades more than a lot of us care to admit. Definitely has caught me stopping out of my trades in ways that it wouldn't have if I just trade momentum days. The key thing to take away with momentum and trading momentum days is there is always going to be another momentum day. So there's enough momentum days for you to not worry about taking trades on days when there is no momentum or low momentum, because typically on days where there's no momentum, there's no clear direction in the market. The trade ends up waffling around in consolidation in a consolidation zone, and it ends up stopping you out of your trade more than allowing your trade to work out. So momentum intraday is key, and we'll talk about what momentum I saw on these particular tickers. And the third piece is price action at key levels. There are particular levels that I look for, and I will mark them out. I'll show you how I mark them out on the higher time frame and on the lower time frames before I enter a trade. Some of these are allowing me to identify the higher time frame structure breaks, which is super important. But then this is also where ultimately I'm looking for the lowest risk entry on the trade that I'm looking to take. And it allows me to have very clearly defined stop losses and very clearly defined price targets when it comes to key levels. So price action at key levels is where I will ultimately take my entry. So these are the three things I look for when I'm identifying a trade: higher time frame structure break, momentum intraday, and the price action at key levels. The other thing that is really key to taking trades with this strategy is really making sure we're waiting for candles to close. Now, there are times as you get a sense of how the candlesticks move and the momentum that builds with any particular candlestick. When it comes to your entries, you might want to take a more aggressive entry, or you might be seeing some momentum that is ultimately moving in the wrong direction and it's getting close to the end of the candle close, so you exit just a little bit early or something to that degree. But I can't tell you how important it is to wait for candles to close. This is something that I have learned over the past couple months that I have taken more losses on than I care to admit, where what you're seeing on the screen here is exactly what happens. The candlesticks look like they're going to go against you, and they go into your stop loss, but they don't close above your stop loss, but you'll stop out of the trade anyways because you're seeing your profits, your P&L dip into the negative. And then that very next candlestick ends up pushing everything down in the direction you want to go. I've lost more dollars on this than I care to admit, and I'm sure you have too. So this is such an important piece to make sure that you have in mind when it comes to your plan. Plan your trade, trade your plan. Stick to your stop loss. Don't exit the trade until you have a candle close above your stop loss, and stick to your profit target. Make sure that your profit goes all the way down to your profit target before you take profits. Otherwise, you are shortchanging yourself on the profit side, and you're also going to lose more dollars than you win when it comes to the loss side. So risk management is key here, but make sure you wait for candles to close. And also make sure as you're picking your entries, you want to make sure you're entering at key levels with the candlesticks that tell the right story. Bullish engulfing candles and hammer stick candles are two of the candles that ultimately I am looking for when it comes to what I am trading. My favorite candlestick pattern to trade personally is the hammer stick candle. I love it around the story that it tells around key levels. Basically what it is saying on the bullish side is it's saying sellers have pushed price all the way down into our key level, but buyers were strong enough at that key level to step in and push price back up above the opening price. This shows me that momentum is in the right direction and I'm on the right side of the trade for my break and my retest to move in the right direction. So price action at key levels, you're looking for the right candlesticks to enter in on. You're waiting for those candles to close. And both of these situations were at play in the two trades that I took today. So let's jump into the charts on the Apple and QQQ trade that I took today. So here we are on my Webull trading platform. Once again, I trade Webull. If you're curious about Webull, feel free to check out the link in the description below. It's got everything that you'll need to get started with Webull. But effectively, what I was looking for, there's a couple different ways I draw my levels. I'm on the hour chart. So in the morning, one of the things I look for is I'm looking for ultimately a higher time frame break. So if I step back here, I see here that on Friday, we actually broke below this 241 level and my 237 level, both of which were higher time frame levels. So this is showing me that I'm seeing a clear move to the downside from a higher time frame perspective. One of the things that I am marking out, if you look at these purple lines, I color code all my lines just so I know which level I'm looking at. Purple is for prior day high and prior day low. Beginning of the day, I mark out prior day high and prior day low from the prior day just to see how price is moving beyond those levels or around those levels. Again, these are key points of liquidity. This is ideally where buyers and sellers are sitting, so they're going to be the strongest. And so that's really where you want to ultimately take your entries off of and also plan your exits around. Now, this gold line is my pre-market low. I also mark out pre-market low, pre-market high, because I want to see what is happening intraday. And the third key level that I mark out is my opening range of my 5-minute candle or my opening range of my 1-minute candle to ultimately see if that potentially serves as the proper entry. So if we step down now into the 1-minute time frame, this is ultimately where I'm going to take my entries on. I always take my entries on the 1-minute time frame. Here's what I saw on the Apple trade. We obviously broke below the prior day low, and we ended up breaking below the pre-market low. My first trade of the day was to ultimately come back up here to this pre-market level right here and retest it. And I was waiting for that push back to that pre-market level to be able to retest it. It ended up not moving back up to the pre-market level. Sellers were too strong. So it pushed down even further. I ended up marking out my 5-minute low here and ultimately was looking at that now for a potential retest. And what did we see? We saw price break aggressively below it. We saw it consolidate here, push back up into my level. And I'm not going to get into this white box here. This is effectively an order block that I drew, but I will cover that in another video. But it popped right back into my 5-minute opening range level, into this order block where we had sellers clearly sitting, and we put in this beautiful hammer candle right here. And this was a pretty aggressive entry that I took right here, which allowed me to see that buyers wanted to try and push price back up into this order block, but sellers were strong enough here to be able to push the price right back down, and we closed below that 5-minute low. So that was my signal to enter. I ended up entering on that candle, and I was looking for a low-a-day push. And this is where it gets interesting, and this is where the lesson is. I saw price continuing to push the price down, or sellers push the price down here towards my low-a-day. I got close. These contracts were up about 15%. I got close to hitting that low-a-day, but it never actually hit it. And rather than take profits, and I had thought about it, trust me, rather than take profits, I said, no, I'm going to stick to my plan. It ended up reversing back, and I thought I was actually going to end up having to stop out of the trade. But because I had a very clearly defined stop loss above this order block, I waited for the candle to close. It didn't close above my stop loss. And I ended up seeing this really aggressive move back down, close price on the 1 minute candle below that 5 minute range. And we ended up moving all the way beautifully down into my profit target at low a day for a 1-to-2 risk to reward ratio. So the key lesson here is to make sure that you wait for a candle close at your stop loss. Don't just get out just because it wicks up. A lot of new traders would have allowed this to wick up, and they wick above their stop loss level and then take them out of the trade, and then it would have moved in their direction. And I've had that happen to me so many times. So one of the big things I'm working on this year is to make sure that I am staying in the trade until it hits my profit target or actually closes above my stop loss. And so it's so important to make sure that you're doing the same, building a good habit and a good discipline around that. Now, even if you didn't get this first candle here, we saw a push down, but then another hammer candle wicked all the way back up into our order block and into our 5 minute low, presented another great opportunity for us to be able to move to the downside. So that was trade number one, a short trade on Apple. And the second trade that I saw around the same time was on the QQQ. And the QQQ initially was moving to the downside. I thought this was going to move to the downside. We saw a gap down overnight. So if you could see this price level here, we saw this 506.45 level. We gap down below the close of the prior day to this level here. And oftentimes when you have a gap down overnight or a gap up overnight, price likes to retrace into that gap to be able to fill it. And we ended up getting that retracement throughout the day, right? We ended the day back up where that gap fill ultimately was. But when the day opened up, the momentum started to move to the downside until we saw this really big candle, this 944 candle, push price back up. We saw another pullback, and then we saw some clear momentum to the upside. So what I was looking at, I initially wasn't planning to take this trade. I was just going to stick with my Apple trade, but the setup set itself up and it was too good to not take. I had marked out my 5 minute high here. We broke clearly above with strong displacement above the 5 minute high. And then we started pushing back down into it. And I saw this red hammer candle here form. It was a little bit of an indecision candle because of the upper wick. So I wanted to wait for a little bit more confidence. We saw it wick down below into our target here, into our 5 minute high here. And then we started to see buyers quickly step in, forming a really nice green hammer candle, pushing price up. That was my signal to enter. So I went ahead and hopped in the trade with a target for high of day. And we saw price get pushed back down into the level again, but then quickly wick up, which showed that buyers were clearly in control. So this one was definitely starting to work in my favor, gave me confidence to hold this trade all the way through, had a 1-to-2 risk to reward ratio to hit that high of day. And then I had a higher time frame objective here at 503.37 from a higher time frame level that I was looking at, which it went right into. So that was the second trade I looked at. Again, higher time frame thesis, where we had a gap down on the higher time frame, broke below the prior day low, and then we saw intraday momentum moving us to the upside, very clear displacement and a retest with the right candle for me to enter into, the candle that I love to see. So I entered in, was able to take it all the way to the top here for some profit. So there you have it. Two trades, one to the downside, one to the upside, both around the same time, in the same way, on the same day, but we were looking at a higher time frame break of structure. We were looking for intraday momentum, and we were looking for price action at key levels with very clear profit targets and very clear stop loss defined, so that way we can hold our trade. Be sure to stay tuned for next week. Next week, I'll dig into some of the trades that I take and how I clearly define profit targets and stop losses when it comes to setting these trades up. Sometimes those can be a bit tricky to establish. So market structure is key to understanding those particular pieces to define where and how you set your stop losses. If this was helpful, definitely hit the like button and give that subscribe button a nice pound. I really appreciate the support. I appreciate being able to share my trades with you and to trade alongside you. If you took some of these trades, drop comments down below. If you're learning something, drop comments down below. I appreciate the conversation. And until the next video, we'll talk to you soon.